going to start today by saying, what the fuck, guys and girls? What the actual fuck? Today, Melbourne Cup Day. Got my glass of water, just in case anyone thinks I'm off my head. Stop drinking, Birchie. Stop drinking. Not drinking. I'm going to swear a lot tonight. Lots of things that we need to talk about, and lots of things that we need to discuss and cover off on. Today, we saw the rates in Australia at the RBA go to 10 basis points. What the fuck?
How great is that? 0.15 reduced by.
It's crazy time to be alive, and lots of cool opportunities, lots of bad things that are happening as well. Not regarding the finance, but lots of bad things for humanity.
I thought we're cruising along all right?
No, life's amazing. Life's amazing, and the world may be a screwed up place for a lot of people, but your life don't have to be. Everyone else's life doesn't have to be if you understand how the system works. And I've got lots of data today, and I've also got a special guest. I've got Rose Renouve.
Hi everyone.
Who is our head of Zinger Finance here, looks after the team at Zinger. Rose has been my personal broker for about 15 years now.
2005, 17?
Yeah.
2005.
Yeah, 2005, 15 years,
yeah.
15 years, Rose has been my personal broker. A lot of people, ask me how did I do, 220 properties in my portfolio. Having the right team around you is important. Today, I thought I'd bring special friend and special guest Rose on to answer some questions.
Thank you.
So I've got a list of questions here that I'm going to ask Rose a little bit later. And any questions that you guys have, feel free to shoot them over, and I will ask them to Rose as well. But starting off, I want to get 20 minutes of talking about what is happening out there in the marketplace, and we need to talk about it because this is where the messed up stuff is, Rose. A lot of people are cheering today that we had a rate cut. I am, because every time the rates drop, I save tens of thousands of dollars per year. Looking at, most people, they'll just think, oh, it's a rate cut, whatever. This is the first time we've ever seen a rate cut in the history, in the last 50 years of our currency being the way it is, where the rate cut has not been in a 25 basis format. Every time we've seen a rate cut, it has come in the format of 25 basis points, 50 basis points, 75 basis points, 100 basis points. Why did we go at 15 basis? It's because they have nowhere to go. If we go to 0%, it will be a Y2K moment. And we talked about this on Facebook going about a year ago, that the banks aren't ready. And I think that we will see them ready around March next year. And I think when we go...
2021. I think that's also the prediction, like for some, that lending criteria may ease off.
It will ease off. It also comes into the point where the home loan holiday, the mortgage holiday, comes off as well. And that's just like the top of the surface sort of part of it. However, the scariest part about where we're at the moment is the money, right? And tomorrow I'm going to be doing a webinar on hyperinflation. We will see hyperinflation, and it's going to be exciting. Debt gets forgiven in a hyperinflation. So I just got a message here from Girk saying the video is lagging. The voice in his video isn't in sync. I'm just doing what would normally happen on a Facebook Live. So I'm not too sure if there's any issues on your end, but it appears to be working fine here. So if there's any issues, just let me know. But, right? What the fuck, right? And let's,
I really get excited every time you talk like that, because I know it's a
something.
good news, something.
Yeah, it's amazing. So, looking at where we're at the moment, our currency is dying, right? And I said we'd see a depression of biblical proportions coming in the future when we had the GFD. And if you look at you know, different religions out there. I'm not going to get into religion too much tonight, but you know, when we look at what religions are out in the world, there's you know, there's a Dajjal that'll come through for Islam, which is you know, the one-eyed beast that will come and kill the world. You've got the rapture, which will come in the Bible, which is the mark of the beast. And I'm not saying we're at end times, but we're in a system where there's satanic forces, right? You just look at the RBA logo there, right? The RBA logo, does that not look something satanic to you guys? Look at it. Look at it, right?
Yeah.
And we're at a point where there's
pointy,
dark forces, right? Dark forces are here to tax, trap, and enslave us. So looking at this, right, this is a media release from RBA, right? And, you know, they're talking about, will President Trump win, or will it be Joe Biden that wins, or whatever the case may be. They've already selected whoever it is, right? And I think it'll probably be Trump. But they've selected it. People are watching, oh, which horse is going to get brutally damaged today and end up dying, which, you know, it happens every Melbourne Cup. But no one questions what came out from the RBA this week. So this is straight from the RBA. The Reserve Bank partners with Commonwealth Bank, National Australia Bank, Perpetual and Consensus software on wholesale central bank digital currency research project. Every fucking country around the world has a digital illusion of wealth cryptocurrency coming out at the moment. A fucking cryptocurrency. They said, oh, it's a scam. Bitcoin's a scam. Bitcoin's probably the realest fucking thing that you'll find out there when it comes to cryptocurrencies. You will see what will happen in the future, guys. This was released yesterday, 2nd of November. So this article came out from the RBA website itself. Christina Lagarde, or whatever her name is, some weird-ass fucking looking chick from the European Central Bank. We'll read her statement. Cambodia launching a digital currency, cryptocurrency. Why is every fucking country around the world coming out with a cryptocurrency now? The Reserve Bank today has announced that it is partnering with the Commonwealth Bank, National Bank, Perpetual, Consensus Software, a blockchain technology company, on a collaborative project to explore the potential use and implications of a wholesale form of a central bank digital currency, CBDC, using distributed ledger technology, DLT. This is part of ongoing research at the Reserve Bank with the CBDC. We are going to lose our currency very shortly. It is not going to survive. I reckon we'll start to see this getting implemented in the first quarter of 2021. We've got not before 3 months and not after 12 months. This time next year, we will have a digital currency like this. Lynette Zhang, which is a commentator in the US, she talked about the LIBOR rates and the LIBOR market actually winding up in 2021. And this was posted maybe about 2 years ago. And people were like, yeah, that sounds a bit weird, whatever. I shared it in Birch feedback at the time. There is no system. They have to finish this system. And we are at a point where we're going to see a hyperinflation. We're going to see the hyperinflation today. We're seeing massive money printing, which is going to eventuate into a hyperinflation. Just remembering, guys, in case any of these commie fuckers want to watch my videos, this isn't financial advice. I'm not a financial advisor. Rose isn't a financial advisor. She's a finance expert. She helps people fund their property portfolios and build loan strategies for people. We're not financial advisors. This isn't financial advice. Goes on to read, the project will involve the development of a proof of concept for the issuance of a tokenized form of the CBDC that can be used by the wholesale market participants for the funding, settlement and repayment of a tokenized syndicated loan on Ethereum-based DLT platform. Why have we got here cryptocurrencies now coming out on the RBA website as a press release? Why have they gone in to do this? Why has every bank around the world come in to do this? Let's go and look at what else we've got here coming through. It's a bit slow tonight, uploading on this phone. No, there's just another one of the same sort of articles. Lagarde, right? This is a lady that you know, does that even look human? Come on. these people? Who are these people, right? Who are these people? European Central Bank. I still remember when was that? There was this rickety lady that was working in the Fed, Janet Yellen, right? And she said we'd never see a financial crash in our lifetime. So whether it's meaning that she's going to die of some bad disease, or whether, in our lifetime, how are they going to control this, right? And here we are, got another one of these people that are coming out with these things. European Central Bank President Christine Lagarde Sunday announced ECB survey of public opinion regarding the issuance of a digital euro, implying the central bank is considering a retail central bank digital currency, CBDC. How can every fucking country around the world launch its digital currency on the same date, right? We can't even organise to get a Facebook Live right. We can't even organise to get, everyone together for dinner, right? We've been trying to organise a staff dinner because Zinger's been doing awesome things, and we can't even get 10, 20 people together, right? On the same day at the same time to catch up for dinner. How can every nation around the world have this orchestrated digital currency just from nowhere? And because their currencies are dying, you don't want to cough on the nose. Cryptocurrency is a good thing. Digital, it's a mark of the beast, guys. Mark of the beast, and we'll get to that shortly. As Europeans are increasingly turning to a digital in the ways they spend, save and invest, we should be prepared to issue a digital euro. If indeed, I'm also keen to hear your views on it, Lagarde said in a tweet announcing the survey, while saying the ECB is still reviewing the possibility of a digital euro, meaning they are going to do it because they wouldn't be coming out with all this stuff on a specific same day. It's crazy. Just very interesting. Really, really interesting. So my thoughts, as I said, people are worrying about who's going to win the election. The only person that's going to win is these central bank fellas. They're the ones that are controlling the show. We are handing over the power. If we have a digital currency, it will wipe out the tax department. It will wipe out the banking system. It will wipe out the currency we have. This sits above government. Government is middle management in the show and the world that we live in. Our currency is dying. We've got a new issuance of currency. They call it money. One eye, right?
Yeah.
One eye, right? Money, one eye. The devil, the one-eyed, right? The one-eyed devil, right? It doesn't matter which religion they talk about this thing here. It's a satanic force. Most people look at, what could be comparable to this. The only time that I think could be comparable to this would be in 1971 when President Nixon, Tricky Dick Nixon, took the world off the gold standard, the Bretton Woods Agreement. We saw last week, we talked about articles about the new Bretton Woods moment, the Great Reset, the new normal that we have to have. New normal? New world order normal, right? I'm not trying to get into conspiracy theories, but we're living in a world where we're going to see a shift from the currency that we're using is written on the wall, and we're going to head over into a digital illusion of wealth. If the money is always in the system, it is never yours. It is a part of the system, and you're a slave to the system. They want to tax you, they will tax you. If they want to cut you off, they will cut you off. You have no control of this. So this is a changing point in humanity from one aspect. From another aspect, it leaves opportunity. And finally, if you look at what happened in 71, we saw the write-up of massive inflation through the 70s into the 80s, and then we saw the bust in the early 90s before our currency continued to die. And our currency has been dying ever since the late 80s to early 90s with those big recessions. There's no ways to revive it, and we're going to see massive inflation as we head into this digital illusion of wealth. They may run it for a period of time in collaboration with the current dollar system. However, I believe that we're going to see some format of selling your soul, and literally that, you have to sign up to a database, a network, a QR code, a stamp, that mark that's going to be coming through to you. And I'm not trying to preach. I'm not even a religious guy. I'm spiritual, but I wouldn't say I'm a religious guy, so I'm not going to preach on people. But it's just interesting to see that, here we are in an interesting world. I always had the belief that we would see the central banks gobble up the banks. They will have to take out and bail out their balance sheets in the future. I'm very big on debt at the moment. I'm still trying to get as much debt as I can get my hands onto, collecting assets as many as I can. Look at these. I actually had earlier on today, look at these, Rose. I won't show them on screen, but these are two motels.
Yeah.
Two motels.
Yeah,
There we go. Let's go clean up some motels while we're at it, guys. So, like, getting as much debt in this current system will be forgiven in another system. I believe that we may not even see a need for a tax in the future. I feel that we'll have a social credit system, which obviously all this tech with biometric data is being installed and implemented at the moment. But the central banks are at it, right? When we have the digital mark of the beast, illusion of wealth, being in the format of a digital cryptocurrency, and we shouldn't have Bitcoin. No one should have Bitcoin. Just the same as no one should have had gold when it was $20. But gold's $3,000 at the moment an ounce, right? And gold was $20 beforehand. Then it became illegal. You couldn't hold gold.
Yeah.
You couldn't own gold. You couldn't have nuggets of gold. You couldn't have gold coins. You couldn't have gold anything. You could only have up to 3 gold coins, and one of the coins that I've collected over the years is a gold sovereign, right? And these gold sovereigns weren't allowed to be used for many years. People weren't allowed to store them, so there's a history behind this metal. We're going into a world now where everything's going digital, right? And that is a pricing of everything will occur, and massive inflation will come through this period. So. Yeah, the cost of living in today's society is people getting rolled of their personal freedoms, their personal liberties, and of their assets, people being shaken down, and the system will bail everyone out, but at what cost? And this is a really, really cool time, I believe, that we're living in. Like, I've never been so excited. Like, from a personal level, 2020 has been the best year of my life. Like, you haven't seen me this happy. How long was the last time you saw me this happy?
So you're going to end the 2020 with a big, it opens really badly with COVID. No, you're going to...
It never existed, so it never existed. Right? The people get sick and all that sort of stuff, thoughts of people that are getting sick and whatnot. But, this is the GFD, it's the global financial depression. Opportunities, like, how have you seen the market this year, Rose? Like, over all the years?
I don't understand, because they were saying, like, people don't have a job and maybe they're not buying properties, but we at Zinger, I mean, I don't see any slowdown of it.
You guys have been busier than ever.
Very busy.
You actually had your biggest month last month ever.
Yeah, October, yeah.
Zinger had its biggest month. How many staff were you employing at the moment? How many job offerings for brokers that we need?
We need as many brokers as we have.
We need 5 brokers to start off immediately.
Yeah,
we've just taken another office in here to expand into.
We're expanding.
We don't have enough space, so
that's why there's no slowing down with us.
It's amazing.
It is amazing. Yeah.
It's there was a period for about 2 years when I was talking about the GFD, the global financial depression, where people were hanging shit on me, right? And they're like, Nathan's off his head. They might still think I am. People were like, this isn't going to happen, whatever. But here we are. We're at interest rates of fucking 10 basis points.
So you're still in your prediction it's gonna go negative.
100% it's going to go negative.
Yeah.
I bet all my reputation on the line, right? I've spent 11 years in the public eye, building up a reputation, building up business, building up a brand. I put it on the line 3 years ago. If you haven't seen it, there's a 5-part webinar series on YouTube. It's called Raw and Uncut. Raw and Uncut. Someone said to me recently, it sounds like a porno, Raw and Uncut. Yeah. But it's not. It's just me talking about how everyone's really going to get screwed, right? That's probably the only porno part about it, is that it's raw and authentic. This is 3 years before it happened. And, here we are today. And I thought for myself, maybe 2 years, I was sitting there thinking, up until June the 4th, 2019, I was sitting there thinking, why am I the only one so excited in the room, right? Why am I the only one? Everyone's hanging shit on me. I gain absolutely nothing. I'm telling everyone there's going to be a depression of biblical proportions. I'm telling people that there's going to be massive Armageddon out there when it comes to the financial system. It's not in my best interest. People go, oh, Nathan, he's a property spruiker, he's trying to sell us all properties. And then suddenly they go, oh, he's a tinfoil hatter. I was just telling people what I was seeing out there. I was so happy. And this year, I was feeling all this time, oh, well, everyone's saying Nathan's, off his head, getting no praise. This year, we've seen it all happen. We've seen interest rates last year on June the 4th, on the date that I predicted. I called it many times before that. To that date, we saw the first rate cut. We've seen the interest rate come from a year ago at 150 basis points down to 10. Down to 10. They can never raise interest rates again. They can't. In the current format, the current system, interest rates will never go up. I personally, and I've said it for many years, that there's a benchmark target that I've got. I thought we'd see negative interest rates by the end of financial year. We saw, 25 basis points, which was almost zero. I said we'd see zero, and I said we'd see negative interest rates after that, right? I don't know their levers, right? I don't know their levers. I did actually call last month that we would see the rate cut to 10 basis points. We have got a rate cut of 10 basis points, 0.15 down to 10 basis points, down to 0.1. This is 10% of a percent is what the banks are paying for interest rates today in 2020. Every rate cut that I get, I save, 10, 20, 30, $50,000. 20 mil worth of debt, let's just call it that. It's 18 and a half. Rose is going to get me some more debt soon. This is going to be tremendous. I haven't had loans for a while.
5 more properties for you?
5 more properties? No.
This month?
Oh, for me, yes.
Yeah.
I'm going to buy a lot more. I'm going to buy a lot of these things that we're looking at. So I bought some large land holdings recently and some more little tiny properties recently, some bread and butter properties recently, some large motels next to add to that portfolio of my portfolio. So I'm still trying to buy as much as I can, and I love this time. Right? I love it. It's amazing. So
do you think like there might be time like the bank will not let you pay your loan because if it's negative interest rate?
Yeah, so
probably would say like, okay, hold all your loans and don't bother to pay.
Yeah, so I did get asked that today. So one of the questions is the RBA. So this is a question for you. But we'll answer that one to start off with, and then we'll get into your questions. But the RBA's dropped their rate to 10 basis points, 10% or 1%, right? 10% or 1% the rates have gone to. Why are we still paying 2 or 3% at the bank? And that's because the bank has to make a premium. Some people ask if the interest rates go to negative 2 or 3%, which is where my projection is. What would happen with the banks? Like, surely the banks will still charge an interest rate of something, right? There's a Danish bank that came out last year in Sweden, which had a negative 0.5% interest rate. So the bank, if you take out $1 million mortgage, the bank will pay you $5,000 a year to take out the mortgage. It's amazing. If it was,
so will there be a time when the bank would say, don't pay your loan yet, or we'll just caps the...
Well, I actually think we're at that point now. Like, people don't have to, like, oh, it's okay, just put it on a mortgage holiday. Sure, the clock's still ticking, but I think we'll get down. You can still, what's the lowest rate we're seeing? 1.99?
That's a fixed one.
Yeah, fixed rate of 1.99.
Yeah.
It's still got a 1 in front of it.
Yeah.
How long have you been a mortgage broker for?
19 years, 2002.
2002, so 18, 19 years.
Yeah.
When you started being a mortgage broker, what was the cheapest interest rate you could find at the time?
I remember I was so happy when I have a 5.5 or 6% I fixed with St. George.
What was that? How much?
5.5 or 6%. That was fixed for 3 years, yeah. And I've seen like 13%, 18%.
Yeah.
Paul Keating was the treasurer at the time, I think. Yeah.
Paul Keating was it was just a puppet. This is a puppet. Everyone, I grew up going, oh, Labor's bad and I'm a Liberal guy and all that sort of stuff. And for all intents and purposes, I probably am. But, we've seen the biggest socialist spending ever come from the Liberal Party in 2020, $1 trillion, right? I get so happy when I see it, because most people are scared and they're going, oh, how dare they sell out our children. We're just going to see the whole system disappear. We're just seeing, we can just comparing things in dollar terms, not in, assets. Like, if a property was 100 grand a day and is $5 million tomorrow, just hypothetically, which one would be cheaper to buy? The 100 grand could actually be more expensive if you're earning 2 grand a year. But if you're earning $10 million a year because the currency's dead, the money has no value. But Keating, these puppets don't get any say as to what is going to happen with the interest rate. It all comes down to central bank.
Central bank.
The one eye.
Reserve.
The money. I believe that we're going to see one more cycle out of this, like one more.
Before March?
No, not before March. One more cycle over the next 3, 5, 7 years.
I always think that month of March is the month that the first Q, right? Like the end of March is the one that I would be looking for, like, because the job keeper is finished.
Yeah, most recessions start in March or September.
Yeah.
So
And
March
then,
or September.
That would be a very interesting month to do.
It's going to be exciting. Like they're making it so easy money, right? We'll get onto that later about what changes will happen. Easy money, free money, cheap money. Don't worry about paying your mortgage. Potentially they'll pay you to have a mortgage. And then we're going to see, everyone being able to access this cheap credit. What's to put a recipe for?
So credit report is not that important then?
I think the credit report would be. So maybe you can tell everyone tonight about what's really important to get that loan. But I just got one little more rant to go on about. And I'm going to read an article from the RBA, from the Satan-looking bank. But as I was just saying, I see that we're going to have universal basic income here to stay. They're going to introduce a digital currency and say, it's okay guys, you can have some free money today. We're going to pay you interest. You can't get interest in the bank. You can't get interest in any other format. You can't get a return in any other format. But you've got this new trustworthy system which is foolproof, right? Corona proof, foolproof, everything proof. It's terrorist proof. It's every other sort of scam that they've put in. It's going to be. We're going to give you some free money to help you out. We're going to give you some Centrelink. All you need to do is download the app, enter in all of your information, connect it to your MyGov account, connect it to your driver's license, connect it to everything else, so we can actually see who's using, that said currency, and it's going to be an enslavement of the human race, right? So if you don't think it's going to enslave you, right, we can have bets. I'll put my money where my mouth is because that's what I'm doing and that's my decision I make every day of the week. And let's check back in 5 years and 10 years. But this is going to be the most exciting decade of all of our lives. And I'm so excited. Like throughout my life, I've always thought like, I wish my parents had me 5 years earlier, 10 years earlier. I could have taken advantage of a different market or whatever. I am so excited to be alive right now, right in this time in history, getting to witness the change, and it's literally a takeover of a system. So in my view, in my opinion, I'm buying as many assets, using debt as an instrument, taking those assets through a cycle, which is going to be a hyperinflationary cycle. It's going to be a depression based on inflation. It's an inflationary depression, which people aren't used to. It's coming from a different angle. And if you don't see it coming, right? Did you see interest rates going to where they are? I saw someone on my Facebook there right beforehand, oh, you couldn't have predicted this unless you could have predicted a pandemic and all this sort of stuff. All right, they're mopping the floor with this. You know how many times I've been like, oh, because of Corona I can't do this, or because of Corona I can't do that. It's an amazing excuse, right? And if you believe that, then go turn on TV and your communist news network at CNN and your ABC, Always Be Commies, and all those sort of media outlets, and go and just get brainwashed. Maybe go and get yourself the injection with the vaccine as well, and just be happy in life with buying whatever you want with the blue pill, right? And stay asleep. Don't question anything. It's okay. I want to wrap up in 2 seconds and hand it over to Rose, but this is just the last thing I want to read out, and this came just recently, and it's from the RBA, posted in the Birch feed. If you're not on the Birch feed yet, you need to be. Birchfeed.com. Don't be a tight ass. It is for free. All you have to do is just go to birchfeed.com, download the Telegram app, get the link to it, and sign up to Birchfeed. But it goes on to say, at its meeting today, the board decided on a package to further measures to support job creation and full recovery of the Australian economy from the scandemic. With Australia facing a period of high unemployment because you fucked the economy with your monetary policy, that's why we're going to see high unemployment. The Reserve Bank is committed to doing what it can do to support creation of jobs. Encouragingly, the recent economic data have been a bit better than expected, and the near-term outlook is better than it was 3 months ago. Even so, the recovery is still expected to be bumpy and drawn out, and the economic outlook remains dependent on successful containment of the virus. The elements of today's package are as follows. So this is very crucial to understand, because it's not just that they have announced that they're going to give a 0.25% rate cut.
Yeah.
There's something else they're doing in here. A reduction in the cash rate target to 0.1%, right? There's our rate cut. That's all everyone sees, right? A reduction in the target for the yield on the 3-year Australian government bond to around 1%, 0.1%. So they are doing yield curve manipulation here, right? And they are blatantly putting out there that they are manipulating the fucking government bond yield curve. A reduction of the interest rate on new drawings under the term funding facility to 0.1%. A reduction in the interest rate on exchange settlement balances to 0. that one's to 0. But this is the interesting one, and you will not see this on any news. Tell me which news outlet you see this on, and fucking I'll send you a prize of some sort, right? The purchase of $100 billion of government bonds of maturities around 5 to 10 years over the next 6 months. There's another $100 billion of fucking stimulus. $100 billion. They dropped interest rates to nothing, and to save the bonds from going into negative, they are buying up $100 billion of bonds. They're buying the bonds to stop it from going negative, because they've got to put the base in here to stop it from going under. Because if it goes under, they're going to have to go to fucking negative yields. So the central bank is buying up the normal banks, the retail banks. And then when we look at that, over the next 6 months, so when they stop buying that up, the market will fall and go negative, which will leave us at March, which 3 months ago I said that we will see the mortgage holiday stop when we head to negative interest rates. The writing is on the wall. The writing is on the wall. Negative interest rates, March 2021. Am I going to be right? They could manipulate it further, but I don't think we're going to see these mortgage holidays end until we see negative interest rates. So exciting. So exciting. And they're putting it out there. They're just blatantly showing us. They're going to buy $100 billion over 6 months of bonds. Why? What's they going to do? They're artificially making a yield for people that are buying bonds, because it's not there. It's fucking negative yield. The market's fucked already. It's fraudulent system. If you and I did this, we'd be in fucking jail, right? They'd kidnap us and throw us in a cage, right? And that's your system, right? If you believe in your system, trust the system, well, there's your system. And there's all these underhanded deals to make this happen. You think that our leaders are there to control us and help us and all that sort of stuff. Where was Scammo looking after the people in Melbourne? Why didn't he say, nah, you guys are all right, you can fuck off and do what you want? They just don't, because he can't control it. It's the central banks. Under the program to purchase longer dated bonds, the bank will buy the bonds issued by the Australian government and by the states and territory with an expected 80-20 split. These bonds will be bought in the secondary market through regular auctions, with the first auction to be held this Thursday for the Australian government securities. So they're saying they're just going to manipulate the market. They're literally going to an auction saying, oh, well, everybody's fucked. Let's make it look good. We'll just buy it all up. Another $100 billion. We've got $1 trillion in the budget. That's on balance sheet. What about off balance sheet? Imagine we go, okay, we've got a business here and this is the ledger of it, 1, 2, 3. But then we take out money and have a petty cash till. And the petty cash till's just a loan from someone else. It's not even on the assets and liabilities of the business. That's what the government has done to our monetary system. That's what the central banks are doing. You can't even make this shit up. People are too busy. Who's flogging the fucking ass out of a horse? Who's going to win some bullshit scammy election, right? Who's going to do this? No one's asking the question, who the fuck stole my money? Who the fuck stole my assets? Who the fuck stole my job? Who the fuck? No one's asking these questions. Oh, let's just go watch some shit on some Satanist news and fucking, Netflix where they're brainwashing and, manipulating our thoughts. Fucking stupid. At today's meeting, the board also considered an updated set of economic forecasts. The global economy has been recovering from the initial virus outbreaks, with the recovery most advanced in China. Oh, just remind you that China's got a digital currency too. I left that one off the list. Every fucking country with one of these decentralized currencies that's coming out. They make it sound like it's a trusted sort of Bitcoin. Bitcoin is the gold of this time, right? There is so many scams when it comes to cryptocurrencies, but there's got to be a storage walls. There's got to be, if you go and watch The Matrix and you see those people that are trading outside of the system, there's going to be a world for that, right? What are you trading in, right? It's going to be the black market of it, right? But if you think they're going to be controlled and manipulated from some fucking card and some app and some QR code shit that you got to sign up to with some free money, right? Take control of your life, because if you have to have the government to feed you, clothe you, house you in the future, you're going to have a really fucked up commie existence. So this is an opportunity to take control of your life. What else? At the end of 2022, the employment rate is forecasted to be around 6%. The unemployment rate is expected to remain high, but to peak a little below 8% rather than 10%. They're not calling the people that are fucking out of a job, collecting Centrelink checks at the moment. They're not classing them as unemployed. They're still on their boss's books. They're just paying the boss to keep them employed so they can keep their books. Reality is half the country's on government income.
Yeah, even like part-timers, like casual 1 day a week work, they still classify that as employed, right? Full.
Yeah, 100%. And it's like, these people are on poverty line. They can't eat. The cost of goods are going up. The cost of everything's going up. I appreciate everyone sending the messages with some inflation numbers, which we'll get to a little bit later on after Rose gets a chance to chat after my rant. But it's all manipulated, guys. It's more manipulated. Oh, CPI figures. Oh, we're going to see an inflation of this. They used to have fucking steak in CPI. Now they have bloody sausages and dog food and shit, because that's all people can afford to eat. Beyond Meat and all these friggin' meat, all these fake meat out there. You want meat? Go fucking eat meat. Don't go get a plant-based meat thing that's like...
That's more expensive.
More expensive because people can't get... People are going to be eating this. It's going to be a luxury item. We read out the article last week saying it'll be a privilege for people to be able to eat meat in the future. I don't fucking know.
Well, you get a cauliflowers as rice.
Yeah. But they're like... The cost of everything's gone up.
Yeah.
They can't mass produce. Like in the Matrix, they said that they eat all that pasta, that slop that they injected. That's basically what they're doing. Like, you go and look at a chicken, go get a KFC chicken, and look at the breast, right? It's got the 2 chicken breasts. You can fit in the palm of your hand. I've got a massive hand. I'd need a normal chicken hand to fit in mine. But the little chicken breast has got 2 breasts on it. The things are born without a beak. I hope no one's eating dinner at the moment. These fuckers are organisms. They're not real animals. They're injected with shit to keep the hormones and just the limb to grow. They're growing limbs. They're human harvesting. Bloody, well, not human harvesting, but harvesting these limbs. What are they going to be filling for now? What do you think? Kids come out and they're like different and all that sort of stuff. Oh, come on. Anyway, Rose.
And you know what? I'm really looking forward to your tomorrow's hyperinflation, because if you're so into it, can you just imagine what you're like tomorrow?
It's amazing. I don't know. Tune in tomorrow, guys. It won't be on Facebook. You do have to reach out to my team. Send out an email to my team at admin@binvested.com.au if you want to be a part of the webinar. I don't have a link here or anything that I can share with you. Maybe one of my team can put in the message description for you guys to have a look at. If that could be done, that'd be awesome. But yeah, looking at tonight's topic, I want to talk about finance. We've got Rose, who's the head of Zinger Finance. Been my personal broker for 15 years, done about 80% of my loans in my portfolio. For those of you that are new around here, I own over $70 million worth of property, 220 plus, maybe a couple of new motels that'll add in there, so it might be 222 soon, worth of properties. If it's important to have the right team around you who understand how finance work, financial markets work and whatnot. I thought I'd bring Rose on tonight to talk about some questions and answer some questions. So if you guys have got questions, shoot them over. I've got some questions here. Maybe we can give a few examples of some things
Common
that people
questions.
of portfolios as well that we've built this year. We just did a deal the other day in Parramatta, which we settled for $290, which just settled.
Yeah.
We're starting to revalue those things, pull out the equity. Not telling everyone to go get their equity, but we've got people that have started with their first property, well, not this property, first property this year, and are up to 4, 5 properties in their portfolio.
Do you know that property in Parramatta, right? We've already tried to value that.
Yeah.
And it already increased in value before it settles.
$371,000. We bought it for 290 grand.
Yeah.
I threw it out there as a hot deal. You guys could have got on board with it, right? You guys could have got on board.
It already increased in value.
290,000. It's valued up at 271. They just settled today. Today.
Yeah.
80 grand. Fucking 80 grand before it settled, right?
Before it settled, like 2 weeks before it settles, we already knew what would be the value because we've already pre-valued it, right? And
Yeah. There's so many deals that we've done, right? Like we've never been able to get access to equity like we can in 2020. The banks are tough. Customer service is really shit at the banks. They don't have enough service levels bad. But I've got a few things, right, just to point out. So this first one, and I will touch on this again at the end of tonight. We have 59 days till the end of the year, right? Well, 59 days.
59 days.
Where did 2020 go? Most people normally around November, December, are getting pissed, working out where their Christmas holiday is going to be, going out to a Christmas party, trying to, get drunk and be an idiot in front of all their colleagues and whatnot. People are focusing on what they're going to do to stuff the chicken, who's going to come to their house Christmas Day, which poor bastard they're going to buy Christmas presents for that they hate, but they feel mutually obliged to buy something for them. And that's what most people focus on around this time of the year. However, we're almost all the way through the year of 2020. Most people are going to be focused on the wrong things, but there's people that are committed that want to sell out there in the marketplace. There is a good time at this period between November, December, January and February, those 3 sort of months in between there, to pick up properties that are really, really cheap and to get bargains. A lot of people will be wanting to go out there and buy properties over Christmas. If you do want to buy them, reach out to my team. If you're one of my investors, send me a text message. If you are one of my investors, send us an email to say that yes, you do want to look for properties, you're ready to go, that's cool. If you are not, then you need to get your finance sorted. The biggest part is getting your finance. If you've got to get equity out of your property,
in readiness.
Have you got your equity ready? Have you got the loans ready? Because the banks aren't turning around very quickly. The banks at the moment, what's the bank's turnaround time?
Well, 3 weeks.
For which banks?
ANZ is 3.
3 now, wasn't it?
Yeah, it
6?
used to be 42 days.
6 weeks to get a loan from ANZ,
42,
and it's gone down to 3.
3.
Okay, well, that's good.
Yeah.
It's been a bloody nightmare. That's
So
been...
CBA is hard. It's getting harder, but it's easing now a bit, right?
Yeah.
So hopefully it will go back to just 5 days turnaround.
Yeah.
That would be ideal, right? Because if you do like upfront valuation, because the bank allows you to do that, then assessment within 5 days, then they will meet the deadline for those purchases that we keep extending.
It's been a very terrible time because we've got markets that are increasing massively in the property market. We're losing deals quite rapidly out there in the market just because a lot of people paying more than asking price for properties, but the finance is taken forever as well, so it's screwing up purchases, and it's not something that we can control because it's the back end of the banks. And hopefully when we build a bank one day, Rose, we won't have to worry about these problems. They'll be our own problem. We're going to build our own bank.
No pay slips is, we don't even have to cite pay slips, right?
Oh, we can do whatever we want if we have our own bank. But, don't worry about the banking license. Like, we'll be able to pick up everything off the chessboard when the system does collapse. But just, make sure that you're getting yourself ready for Christmas. Think about this time of the year, right? How was your 2020? Like, you're going to go into a period where you're going to get drunk or watch some fireworks, and make all these great things that you say that you're going to do and never actually commit to it, right? You're going to say, I'm going to, quit smoke, and I'm going to, exercise 3 times a day. I'm going to, go and buy 50 properties in 2021, and you probably won't do fuck all, right? Because that's what happens, right? And how many of you were doing that in 2019, going, 2020, YOLO, the biggest year of my life, hashtag billionaire, money. And then what have you done this year, right? So I think this is a good time to sort of reflect on the year that was, look at the year that's ahead of us, and look at, how are you going to plan for that year to get you to where you want to be. What can you do to close off this year? When was the last time you looked at your loan position and pulled out equity? When was
See, we're planning when we had a webinar in July,
Mm-hmm.
so there were like 200 plus people, right? So
Yeah.
we're offering I offer personally,
Yeah.
I would review your portfolio.
Okay.
So we need to send that email soon, and they have to register, and
If
so-
someone wanted to get access to have a chat with Rose, Rose is the head of Zinger Finance, my own personal mortgage broker of 15 years. It looks after a lot of sophisticated investors' portfolios. When you get 1 or 2 properties, it's easy. When you get 10 or 20, there's a big difference between
And if it involves trust, company,
10 rental letters,
Yeah.
10 loan statements. At Zinger Finance, hundreds of millions and billions and trillions of whatever dollars that we loan for people and get for
Yeah.
people for their portfolios. We quite often get commented on from the banks and the aggregators out there that say, you guys have got like the most cleanest and vanilla deals. Like our loans are 80% LVRs, like 99% of them would be 80%.
And we do. I'm so proud though, because recently, we have lenders wants to see us,
Yeah.
wants to workshop with us, because they knew we do a lot of loans, and also
Our loans
quality
aren't in
submission
default.
as well.
Our loans aren't in
Mm.
default during this time.
Yeah.
Our investors are well trained. We've got good quality loans. Looking at, sorry, I just seen emails fly through my screen as well, but I got distracted from an email in there. Looking at, all of our properties, we actually have 0 properties on our books, a big fat 0 properties that are cross-collateralized. Like getting that loan
Yeah.
structuring is
It's
crucial.
very, very important.
So if you want to get your loan structured right, you can catch up with Rose and send us an email, flick us a private message, send us an email at admin@binvested.com.au. My team will book in a meeting with Rose. She will be packed out, I know, from that offer, because this will be broadcasted. Usually about 10,000
There will be an
people
email
watch this.
going. There'll be an email going out probably in the next few weeks, and
Yeah.
I will be requiring you to. I'll be sending this spreadsheet for you to attach the list of your
Yeah.
properties, so it's easy for me then to
Yeah.
review the portfolio. Yeah.
Cool. So if you have a property, you're thinking of getting a property, someone with a property, you guys might be watching and you've got a cool portfolio, but you might have a friend, a family member, a parent, a child who wants to get themselves sorted. Flick us an email, admin@binvested.com.au, and we'll get you in contact with Rose to work out a finance strategy. But on that note, I've got a list of questions that my team has put together for you tonight, and I'm going to ask you these, and maybe we'll just run through them quickly. So for self-employed people, what things do we need to have in order for them, like tax returns and
for self-employed people, we do need to, up to December, end of December, banks still accept the 2019 financials. And also in saying that, financial statements, which are balance sheets as well as profit and loss statement, and then the company tax return as well as the individual tax return.
Okay.
2019 is still acceptable up to the end of December.
Yeah.
But for example, if your 2020 is already done and it's a better result than 2019, preferably 2020 as well.
Cool. And what about if someone's been bankrupt? People are doing it tough out there, people are in bad positions. What happens if someone's got himself into a spot of bother?
See, If you have bankruptcy in your CRA, or you have experience like getting Part 9, which is like the arrangement, right?
Yeah.
There are still lenders that can lend you money. It could be it will be in a higher interest rate. However, once that bankruptcy is out from your CRA, we can always refinance you to a better loan, better interest rate. Yeah.
Yeah, cool.
But we can always find something.
So what about buying a property, like we're heading into that period of time, what about buying a property if you haven't got a loan approved? Is it okay to buy a property if you haven't got a loan approval?
This is in a perfect world, it would have been ideal to have a pre-approval. However, sometimes pre-approval, the bank takes time to assess the loan because they would put preferential to those who already found a property.
Yeah.
So what we do sometimes, there are cases like, okay, you found a property, we lodge it, it takes long time for the bank to approve, and then you lost the property, but we kept that loan and will replace the security once the bank start assessing the loan. So it's already queued up there. Now, the good thing about having that contract of sale, I mean, the bank would attend to it more quicker than the pre-approval where they haven't found a property yet.
Yeah. So if you have a property, they'll be quicker than if you don't have a property.
Yes,
okay, cool. So with from my side, like when I buy properties for our investors, I'm always putting in there finance, pest, building, due diligence clauses. I've never had anyone, still to this day, in 2020, ever lose $1 worth of a deposit in Queensland, for example, because I've got so many clauses.
Queensland also has 21 days.
Well, they normally have 5, but then we add all the clauses for it, so we get to the 21 days. Yeah, it's not normal for it to be.
Oh, okay, because I've noticed they're like 21 days.
You always put it in, just for customer protection. Most people don't have that in their contracts when they purchase in different places, but I get 21-day finance, pest, building, due diligence.
And then they only need 1,000 deposit.
If they pull out, they get the $1,000 back.
$1,000 back.
Yeah. How soon can someone pull out the equity, Rose?
Oh, okay. How soon? We have an example for the Botany one, right?
Yeah.
It settled, and then 2 weeks later, we revalued 130,000 more. That was after 2 weeks of settlement.
Yeah.
And as I said, Harris Park.
Yeah.
Would be in 2 weeks' time. We could probably pull out some equity. So what we normally do with Zinga, we tend to keep track on the properties that we thought might be, the valuation might come up. So when we have that valued with different lenders, then if there is an equity with that, then we'll let you guys know and says like, yeah, you've got an equity here.
Yeah.
Do you want to pull out some equity and purchase another property?
So
in saying that, we've also looked at your servicing, right? We can't offer, like I said, you get an equity there and you cannot borrow for the new purchase. We've already done some of the homework.
When I present deals to our investors, I'm not looking at property number 1 or 2. I'm looking at property number 3, 4, 5, 6, 7, 8, 9, 10, because they need to be done in tranches. So, if we're buying something today, we need to look at what it's going to do, moving forward. So, there might be equity there, maybe we can't get it out, but we need to make sure that the properties are complementing each other as you build out that portfolio. This year, I've seen more people, and I keep banging on about this, I've seen more people go from 0 properties to 5 properties. I've seen more people go from, X amount of properties over that 10 properties in their portfolio. We've got more 10 plus people in our portfolios this year than any other year ever beforehand. We've got more people that have started building property portfolios and been able to, we've done more equity loans in 2020 than any year through any of the boom cycles that we've had. So
it's funny how you say that, because I was talking to one of the brokers here, Kabir, right? And he goes, look, Rose, this one, I've done this loan 2 years ago, hardly borrow and can't borrow and whatever. We try to fit in, and look at now, 7 properties.
Yeah.
I mean,
That's what's cool. That's what's cool. I didn't even know. I'm not even privy to this conversation.
No, he just pointed to me. I said, this is my client, and 2 years ago we look at, he hardly can borrow because servicing is an issue, right?
Yeah.
And
a lot of people think that they can't do something. A lot of people feel like they're destitute. They feel like, why can't I be this person that's getting 10 properties in 2 years, and why can't I get 5 properties? Why can't I get 3 properties in a year? It all comes down to finance structuring and finance strategy, and that's why I wanted to get you on today, Rose. If I'm getting rental income, what percentage of this does the bank calculate? is it from my cash flow or the actual rental? And why won't they take the 100%?
Okay, the bank only takes 75% or 80%, whichever lender, right?
Mm-hmm.
I think maybe because there are some expenses associated with having a property.
Council, strata, agent fee,
So they'll take 75 or 80%, yeah.
So
But then again, they'll do negative gearing as well.
I was talking to someone the other day. I had a map session with someone, and I believe that they're coming on board. I called them and left them a message yesterday. They have been told from like a half dozen different people, you can't do anything, right? You can't build a property portfolio, you can't get finance, you can't structure, you can't do anything. I went to Kabir. Kabir is one of our senior brokers. He's been with us for about 5 years now. And Kabir said, look, if they had an extra $1,000 a week, that they could get a loan. And this person's situation had a lot of money invested into a different market, into maybe potentially like a stock market. And I was like, okay, so if the person was to allocate some of their funds and buy 4 properties that are 100 grand a piece, they rent for 250 bucks a week, that means 400 grand will get the $1,000 a week. The bank will take the $1,000 a week as an income and get them back on the surfacing. So it's the property's purely the vehicle, guys. RBA cut the rates today, as we ranted on about, or as I ranted on about beforehand. How will that affect someone's interest rate?
The RBA, the RBA announcement doesn't necessarily follow that. The bank would
give on that rate.
Give on that rate, but I think some of them are main banks under pressure from the media to really cut the rate. So I'm hoping that probably they will pass at least 0.10 basis reduction.
Doesn't matter. They're going to come down further anyway. So it's we're going to see rate cuts, and I've got another one which isn't on the list, but maybe it's on the list. But what will happen? What do you think will happen next year when the bank, when March comes and they make it easier for people to lend? There's a lot of people I know that if we look at the market, like hands down, I can see the boom, right? We've got the data. We've got so much data here at B.Invested that we can, see through that. If we were to see the banks, which they indicate they'll do in March next year, make it easier and remove all of the changes and all the difficulties to get through, there'll be a lot of people that can buy, but B, what changes could people expect?
I think probably lowering the HEM, the household expenditure measure.
Can you explain to everybody what that is?
No, HEM is basically the living expenses, right? That includes your everything from groceries to entertainment to gifts to pet, your insurance and everything. Now, at the moment, some lenders, which this one I do not agree, right? One of the lenders, or 2 lenders actually, say for example, your husband and wife earns 200,000 and you get a rental income of another 100,000. So they'll look at the gross income of 300,000. The HEM, which is house expenditure measure, is capped at 59,000 because they feel like if you earn more, you must be spending more. And that doesn't follow all the time, right? So I'm hoping that it's ScoMo and the treasurer always saying like...
It's SCAMO, not ScoMo.
SCAMO
around here.
It's a ScoMo, right? And the treasurer, I think they might have pressure to, like with UPRA and that sort of thing, right? To make it easy. But the second tier, actually, I'm so impressed with the second tier because they're not as regulated by UPRA and ASIC compared to the main banks. So we've been using a lot of second tier, and their rate is also sharp. They're not like the old style where they're like 2% more. It's not. It's very, very competitive.
They're going to have to be because everyone's going to go back to the big 4 soon. So.
The second tier are really, this is the second tier market at the moment.
And then
we have like Resimac, Peppa.
So next year, those people with the shit banks, should we call them, the second and third tier lenders, where everyone's like, I want to do the big 4. Maybe they could be pushing for some rate cuts maybe next year, or being able to refinance back into the big 4. So if you've got a loan that you're stuck with a second or third tier lender, maybe that's something in March next year we can look at refinancing and pulling you out of that and getting you a cheaper interest rate. I know that we've got multiple investors this year which have saved about $30,000 to $50,000 a year on restructuring their debt.
Yeah.
If you could save or add an extra 30 to 50 grand
Cash
in your
flow
profit,
is just, yeah.
what would that do for your cash flow? We're going to lose Instagram. We'll be back in a second. Instagram. And share the story. Start again. Live. Oh, got a cramp in my leg while I did that.
Yeah.
So next question for you, Rose. What happens? So every day we see people that come to us and they have different positions. Some people are starting off, and most amount of times it's better when people are starting off with their first property, because a lot of people screw up when they buy properties. They buy them too expensive, get caught up with the sprue car, etc. And people come to us where they've bought a property that's worth 500 grand and it goes down to 300 grand because they've bought the wrong asset, or they've bought something that's a bad position. I love going to those areas and picking up stuff for cents in the dollar, like these places where these motels are, and that the places, without saying where they are, where we've been buying a lot of properties for our investors as well. Those markets where things used to sell for maybe 500 grand and they sell for 50 or 80 grand now. I love picking up that stuff, but some people come to us where they've bought them at the top and they've been hurt. How does, like, the property values drop for someone? How does that affect their loan or anything like that?
Their current loan?
Yeah.
Okay, so is this a question like, if you have a current loan at the moment and the valuation of your property went down, with the residential loan, it doesn't impact you because unless you're refinancing it. But I think more on the commercial lending, because the commercial, they keep reviewing your loan, and I know that they will call you in 6 months' time and said, okay, your property now is only valued this much. You have to make up for the remaining, because there is the valuation ratio that they have to satisfy. So I think commercial lending will be more impacted when the valuation goes down. But residential loan, yes, it will impact if you refinance the loan, but the bank doesn't review residential loans.
Yeah.
So
cool. Why do investors and why do we do interest only and not principal and interest? Like what?
Well, interest only with the investors, I always recommend interest only, because obviously for cash flow purposes and also for taxation purposes. However, we do recommend principal and interest repayment if it's if the servicing is very tight, because with P&I you can borrow more than the interest only. Only because if you do interest only, say for example, the loan is set for 30 years. And if you have interest only for 5 years, so the loan is amortized for 25 years instead of 30 years. Yeah. Whereas if you have principal and interest repayments set at the onset, this will be amortized for
over
30 years. Yeah, okay. So P&I.
So it helps out servicing?
Yes, servicing purposes, and also the interest rate, obviously, it's lower than the interest only repayments.
I see a lot of people fear that they're going to be paying a lot more money from going to principal and interest. There is the opportunity there to refinance and go from interest only back to interest only. But at the same time, when you do go to principal and interest, like 90% of my loans are principal and interest because the interest only periods have expired and rates are cheaper. So I realised that like some of my loans may have been $1,400 beforehand in interest, but then they went to principal and interest, where the interest went to $1,100 because it went down, and then it ended up being like $1,600. So it's like it's a bit extra, but you've got a larger chunk of savings that you're paying down that debt with. So I just noticed a question: any property deals, Nathan? Always working on property deals. If you haven't watched the last hour of this, I was talking about some deals and stuff like that. So it would be beneficial for those of you that are just tuning in now to come back and watch a little bit later with the rest of it as well. Another question: can I borrow if I defer my mortgage? So a lot of people.
No, if you defer the repayments, right, you still can borrow if we don't refinance that particular loan that you have deferred, right? So there are lenders there that says, okay, if you do purchases, or we may refinance one of those property if you have multiple, right? And if you haven't deferred all of them, we can pull them out. We just have to go to the lender that doesn't have doesn't require a copy of your other commitments.
Yeah.
So we can still do it.
Cool. The difference between drive-by, desktop, and full val.
Drive-by, that's a curbside valuation, right? I think the bank sometimes wants to, probably they'll just check to make sure there is a property there. That's a curbside, right?
Yeah.
Whereas the desktop evaluation is driven by the data, what the data that the bank has, or from CoreLogic, for example. They use it a lot. But for the full valuation, we tend to do that. Sometimes I request to have a full val if the property is multiple dwellings. Say, for example, you put in a granny flat, right? That could have add value, because if it's not a full val, they can only see from the CoreLogic or whatever it is that is only a single property.
Mm-hmm.
So for multiple dwellings, regional area as well, sometimes the bank requests for it.
Yeah.
Now, second-tier lenders tend to have a full valuation.
Yeah.
A full val can be short form or long form, but normally it's only short form val.
Yeah. So with the vals, like they all have the different positions. You know, your finance broker, like your mortgage broker, should, if they understand property, understand structuring, the bank will ultimately determine what they want, who they'll send out there as a valuer. You can't choose who you want as a valuer. We can't have any influence. But we do understand which banks, how they, value, and maybe some banks are better than other banks to lend to.
See, the good thing about now is that we can do upfront valuations, right? As long as we have the intention to lodge the application with that bank, we don't abuse like, okay, because you can do it, you'll just,
Yeah.
As long as we have the intentions to lodge the loan. So first thing first is we look at the servicing.
Yeah.
If it's serviced in that bank, then we try to do the valuation in that bank, because we have the full intention to lodge to that lender.
How many months worth of bank statements for a PAYG client?
For PAYG client, what happened, the bank wants to see 3 months of your savings statement where the salary credits is. Now, 3 months, because they probably say the consistency of the income, and it's also, they don't need to, sometimes the bank don't need to call your employer, because they can see that there is a genuine income coming in. So 3 months, obviously, but with that statement also, they also check your expenses from that. So, how I was saying house expenditure, HEM, right? I'll just shortcut HEM, right? They can check it from that statements. It gives you the pattern, I guess.
Yeah, cool. So make sure that if you're going out there to the pub and you're pulling out cash from the ATM and you're spending it on, cash and pubs, and the banks don't like that stuff as well.
I think they want to look at, make sure there are no undeclared liabilities. I mean,
gambling, drinking.
And also, like, for example, there was a pets insurance, like, I said, oh, what about pets? I said, I don't have a pets, and then there's the pets insurance. I said,
yeah.
What am I going to do with that?
So don't bullshit to the banks, because they've got all the data on you.
Yeah.
That's that thing. Actually, the next question I was going to ask is, what do the banks look out for when looking at bank statements?
Expenses.
Yeah.
Undeclared liabilities. Credit card.
Yeah.
Some of them says, oh, I paid it straight away anyway. It doesn't matter. They'll look at the credit limit, because potentially you can use the credit card, right?
Tomorrow, yeah.
So, and also they're also going to look at there's no lump sum money coming into that account.
Yeah. Okay. And what about like Uber and stuff like that? Uber Eats, food,
they will
takeaway?
look at everything.
So if you've got an eating addiction of calling Uber Eats, I see some people and they always have like a paper Uber Eats. I see it in the office sometimes. People get Uber Eats and say, I can walk to the shops next door.
I don't have an Uber Eats account.
I don't have it either. Yeah, I don't like eating out anymore. So that's cool. Married and de facto, how do the bank assess you?
I like this topic.
Yeah.
So married and de facto are treated the same, right? However, say for example, even married or de facto, if one of you, if for example, all your properties is under your name,
Yeah.
and then you're living in a house that is owned by your wife,
Yeah.
that's really good, because with the bank, you could just say, okay, I own these properties. The property that I'm living in is with my wife. So they give you only a nominal amount of board, like $450 a month.
Okay.
So if those properties under your name and your wife is not on that name, if she has liabilities, you don't carry her liabilities.
Okay.
Only your liabilities.
So it's important to structure that debt, right?
Yes.
I always talk to everyone about having a debt strategy. The
Correct.
accumulation of the debt, the servicing of the debt, the closing down and the consolidation of the debt in the end days. And that's where...
I sometimes I struggle with, for example, like you're in partnership with someone
Yeah,
and not a husband, not a wife.
yeah,
And then we have this experience, right? He's got a partner,
yeah,
and at the time when they did the loan, he was earning much, and now he doesn't have a job, right?
yeah.
So he carries the whole liability for that.
Wow.
Yeah, and then we could have said like, okay, AMP and CBA could say like, if we can prove that the other partners can service his
Yeah.
share, we would have been able to get out of it. But
Yeah.
so he carried the whole liability. So it's
Wow.
very important to think, like, if you're gonna go a partnership with someone other than your wife.
Yeah. I see people all the time where they may go and buy property with their brother or their
Yeah.
friend or business partner or whatever, and then things change. Like one of them might want to settle down, one may want to travel.
Yeah.
Life changes, but you could be shooting yourself in the foot by going halves with someone, which happens a lot of the time. Yeah.
Servicing is a struggle then,
Yeah. Partners less than 12 months, can this affect my borrowing? Oh, wait, partners self-employed for less than 12 months.
it will not affect your borrowing if he's not in, she's not in the title, right?
Yeah, but
So-
like someone was to be self-employed. I read the question wrong. So, partner self-employed. So, like a business partner
Yeah, under 12
self-employed.
months, right?
Less than 12 months, can that affect your borrowing? So if you
It will not affect your borrowing if you can service. What it means is that her income may not be
No.
taken into consideration.
No, let's start the question again.
Mm.
If you went and started a business, you're self-employed, or you had a business partner, not a partner, a business partner.
A business partner.
Yeah, like a business. You went into business. If you've been self-employed for less than 12 months, can it affect my borrowing?
This is what I'm saying. I mean, it
If
will.
there's not a partner, like
Yeah.
But it's
You're in a business. Okay. First thing first. Let's
Yeah.
look at self-employment. Self-employed. It has to be 24 months to be self-employed.
Okay.
There are lenders that can do one year. Under 1 year, that's a second year. But
Okay.
if you look at the general one, it has to be 2 years as a self-employed.
Didn't
No.
ANZ used to do 12 months?
No, it has to be 2 years as self-employed, but they only need the 1
last
year
year.
of financials.
Okay.
So if you're saying like you have a partner, you only have 12 months, you could partner with that, but we may not consider the income.
Okay. So if you are thinking of setting up a business, going into a partnership with someone, important to structure that and have a strategy for it, because I've seen people over the years that have been working in a job for 20 years and then they decide that they're going to become a self-employed or become a contractor.
Yeah, we have one at the moment, do we?
And then you're screwed for 2 years.
Yeah.
Screwed for 2 years.
But there is an exception. Sometimes, like for example, if you come from PAYG and then you're in the same industry,
Yeah.
becoming a self-employed, probably for the first month or 2 months, there is a possibility we can find a lender, but then again, it's not
Yeah.
there's a limitation of who can lend you.
Cool.
Yeah.
So speak to Rose, speak to the team about that first. Question has popped up on the screen. How much does a kid reduce your borrowing capacity by? Is there a calculation for that?
There's no calculation, but definitely reduces a lot.
Yeah.
Because I think they put an allocation, for example, okay, the old days, we know how it is, or how much it is. Now they don't tell us.
Yeah.
It used to be husband and wife, say for example, the living expenses for a couple is 2,000, and then they put another 200 per kid.
Yeah.
So if you get 3, that's 2,800.
Yeah.
2,600.
So about $200 a week.
A month.
A month.
Yeah,
Okay.
it can pull
Yeah.
the servicing.
Okay. So think about kids, right? Think about it later on tonight, everyone. Once, family planning.
Stop making kids. Not tonight.
It's important to plan that stuff. So, do I need 10 bank accounts with 10 different banks if I buy 10 properties?
No. That is not correct, because regardless where you are, the bank knows how many loans you have because your credit reports say so.
Yeah.
Right? They would say, oh, what happened to the Tracy Mac? What happened to that ANZ loan? Well, how come it's not in the liabilities? So
Yeah.
they'll find out. So what I normally do, I saturate one bank first. Once I finish with that bank, then I'll move to another lender. So it's better, yeah, that's not
In my
correct.
portfolio has, I don't know, maybe like 10 different lenders over the years.
But you have how many?
Yeah, like
Yeah.
across all my properties. So I've always utilised that bank, all right, try not to shake things up, go to the one bank, use them until you can't use it anymore, and then go find yourself another bank. Also, like, it looks bad, like, as well, if you're going to go
Yeah,
and apply
so
for all
many.
these different loans. The banks are like, well, you obviously didn't service the last bank, and yeah. Why does the turnaround time for getting a loan take so long at the moment?
Well, I think what happened, it's starting to get better, as I said. What ends up is that most of the assessor, they work from home during COVID time,
Yeah.
and they start to
Bangalore, Manila.
yeah, but they, even if they work overseas, they're not in the office. They're
Yeah, that's
in
what
their
I'm saying.
house.
Like,
Yeah.
so the bank isn't just here in Australia; they've offshored half the bank, and yeah, like,
Yeah, and
people
they,
work
yeah,
from
they don't
home.
even go. Yeah, work from home.
There was a period there where like the phones weren't even answering, like
Yeah,
earlier on in
true.
the year, like
Yeah,
around March
yeah.
and April, no one was even at the bank to take
And we
the call.
cannot even escalate the file, like,
Yeah.
jump on the queue. It can't be done.
Here's a good one. I've got 4 properties and 2 are crossed. Why is crossing my properties bad?
Of course, it is bad, because what ends up, right? Say, for example, there's a loan of 500,000 securing 2 properties, and we know one of these properties could potentially be up in value, right?
Mhm.
So if we have to pull it out, they have to revalue the remaining security.
Properties, yeah.
And then, is there enough value in that property to service the remaining loan? So sometimes when we refinance it, we say, okay, you have to give another 50,000 to keep that loan with
Yeah.
that remaining security. And it's
So-
also hard for administration too. Like, for example, if
Tax.
tax, and not only that, and if you want to sell one of the properties or
Yeah.
whatever, yeah.
I've seen people where they've needed like 100 grand, and they go, I can sell my property. They get it, they sell it, and then they get the settlement date, and then the bank takes all the money because the loans
Yeah,
are crossed.
cross-security. I never had, for all my entire thing,
Yeah.
I never cross-secured. I
Yeah.
think a lot of cross-securitization happens in the branch.
I find there's probably 3 different reasons as to why someone would cross a loan. Generally, it's never from the customer's knowledge.
Yeah,
One,
sure.
people think because they've got a portfolio of loans or whatever, but the first reason is that the broker or the bank is trying to stitch you up, and then it's hard for you to maneuver to another bank, so
Yeah,
you're trapped to
yeah,
that lender.
mm.
Second one is because they're lazy and they only have to
I
do
think
one
more
loan
lazy,
application
yeah.
instead of 2. 3 is because the person's doing the loan is a dickhead and doesn't know what they're
Someone
doing.
doesn't know, and they always say, "Oh, nothing wrong with cross-securitizing. It's all the same exposure." I said, but that is not.
You
the
have no
point."
control of your
Yeah.
asset. You do not have control of your asset,
Yeah.
and you, as an investor, need to remove risk at all steps along the way. The bank, the broker, whoever's doing it is minimising their risk by tying them all together, but you need to minimise your own risk. So,
Yeah. No
properties,
cross-securitization.
none, 0, no deal. So, what does refinance mean? When someone's going to refinance, does it mean you're going to go to a different
Okay,
bank? or-
refinance can be internal, external, right? So, for example, you're with particular bank, and then if we want to get you out from that bank, that's refinancing it, right?
Yeah,
Say, for example, we don't want to get out of that bank, and we know that it increases in value. We need to increase the loan. So what we do, we top up the loan. It's called top up the loan. You're increasing the loan amount of the existing security that they have there. So it's called internal refinance as well. So you're not moving out from that lender.
yeah. Cool. And you can do like a full refinance or a top-up loan, so you can go back and...
Well, for example, if you have if you're happy with that bank, you don't want to get out, or the property, your loan is under fixed rate, So you don't want to, you want to stay with the bank. Doesn't mean because you're in fixed rate, you cannot top up the loan. We can still top up the loan while you're in fixed rate. You just couldn't, it's just difficult to get out there without causing the penalty.
Yeah. A question here from Rod. What if you cross-secured a bunch with one bank and begin to buy all new properties with a second bank?
We're not pulling out. If you're going to purchase another property and using another lender, are you using your own source of fund from your cash?
Yeah. I think it's bad. Like, I would never
Yeah.
cross any of my loans.
Yeah.
None of them are crossed in hundreds of properties that I bought, myself personally in thousands. None of them are crossed.
No.
Because you have no control. Imagine if
Yeah.
you want to refinance one
That's
of the
what I said,
properties,
yeah.
you got 5 of them, leave
They have to
4,
revalue the whole lot.
and they have to revalue the whole lot. You might pull one, you might want
Yeah.
to sell one, and they won't let you. What happens if the market's starting to dip and you want to throw
Yeah, and there's also
20 grand,
deficit
deficit.
surplus. Yeah.
Yeah. Jesse said, can I buy a second property if I have 150 grand equity in my current property? I might answer that one. That's how we build property portfolios.
Yeah.
Like that's the crucial part. So if you've got $150,000 worth of equity, whether that's accessible equity or not, but if it's 150 grand worth of equity that you could go back and get an 80% lend of, that'd be 120 grand. $120,000 at a purchase price for a new property at 150, 200 grand, you might need 40, 50K deposit. So that could be 1, 2, 3 deposits there for 1, 2 or 3 new properties that you can add to your portfolio. If you're buying properties that are, positive cash flow, you might be getting $50 or $100 a week positive cash flow after all expenses into your portfolio, then that income will help pay down the rest of your portfolio or live for your lifestyle. So yeah, I always look at the strategy as to, what are we trying to do? Like, are we trying to
Well,
pay
that's
off?
a lot to cross-secure 5 properties, eh?
If someone cross-securities, it's committing financial suicide. You may as well, that's why people get stuck with 1 or 2 properties and not 10 or 20 because of the structuring, debt structuring, acquisition structuring, purchasing entity names.
The only
types
thing
of
that I would,
properties.
sorry Nathan, the only thing that I would think of cross-securitizing is when you do portability.
Yeah, so
That's an exception.
Yeah.
Because with portability, if we're going to replace that security, right? The rule with portability is you must maintain the value of that property, when it first lodged, when the application was first lodged. So, for example, that is worth 500,000. You want to have portability, and this property that you're replacing it with is only worth 300,000. So that means you have to have another property to make up for that.
They can actually. I have seen it where they've drawn down like the amount and they've lowered it. But if you got a 500 grand loan with one property that you sold off, and then you were going to buy a new property to swap it with, and it's cheaper, you can either lower it down or you could attach a second security.
Yeah.
And I have, I think, 2 loans where I've done that too, where I've done security swaps myself, and I have helped other people do security
but
swaps.
That's the only case that I would think of cross-securitizing.
So people may think that they can't ever get a loan again in their life. I recently had someone that had like 20 grand income, and we were able to go and buy them half a dozen properties, even though they only got 20 grand income because they sold a property and they restructured their position. Jesse said again, with the last one with 150 grand with no savings, wanted to confirm.
No savings? Or just
wanted to confirm just
150,000,
150 with no deposit. You don't need a deposit. If you've got equity in your property, you can withdraw that equity and then put that in an offset account and use that capital. If you've got 150 grand, extract that 150 grand out and use that as deposit to purchase more properties. That's something that Rose and the team here at Zinger Finance look after. And if you need help, you can contact us, admin@binvested.com.au, rose@zingerfinance.com.au, call us at 1300 367 925. Best to email the team at admin@binvested.com.au, because then they'll be able to schedule the call for.
There's also a Zinger website, zingerfinance.com.au. You can also book an appointment from there. And
can you now? The new website?
The calendar,
I forgot that the new website has that. So you can, if you want to book in a meeting with the finance strategist from Zinger Finance, you can go directly to the website, Zinger Finance, ZINGER finance.com.au. There's no red flames around it. Zinger is uniquely different, and that's what we do, and we help people build portfolios. So you can book in a meeting directly from the website.
Yeah,
So,
yeah.
I
Calendar.
forgot that we had the
Yeah.
new website up. I've
Mhm.
seen that.
Mhm.
So,
That's what we're going to be using, the Zinga, the calendar from Zinga Finance website when we start doing those that registered for the website, the webinar that we've done in July.
yeah,
So
they
yeah,
can go through
they
that.
can go
Okay.
through that.
Cool. If there are so many people with cross-securitized properties, how do they unsecure them? Refinance them out to individual loans. So each loan in my portfolio has a loan attached to that property. So one property per loan, apart from the ones that I've done portable loans for where I've changed the security. Next question here is, why should I use a broker instead of going directly to the bank manager?
Actually, we the brokers, we have to find, there are so many lenders right there, right? If you go to the bank, they can only recommend what product they have. Now, in some cases, I have one actually recently. They said, okay, they went to the bank and the bank says no, and they come to us and we're able to help. So, for example, you go National Australia Bank. We know that the servicing of National Australia Bank is not as generous as you go to ANZ Bank. So what you're gonna do? You go all the bank and shop around. And whereas we can do that for you, the same interest rate that the bank can offer, and we're on call like anytime. Like you can, me definitely I answer my calls on the weekend.
Rose speaks to clients at like 10 o'clock at night.
Yeah,
Sometimes
so,
don't call her at that time, but
yeah,
she'll
but
speak
I
to people.
do. Yes, I spoke
I shouldn't
to,
advertise it out there.
I
But
spoke to Sean.
Yeah, don't go mention it for full
but
names.
no, but it's not ideal. However, but I will answer your call if you do. But also, we with using the broker, right? We also do a lot of behind the scene. We contact your solicitor. We contact the real estate agent of the missing documents. That save you from running around at the bank. I don't think the bank would do that.
So, just from my side, I came to you, Rose, when I actually became friends with Rose's son on a property forum all these years ago. I was chatting to someone and I was like, hey, and he's like, hey, yeah, my mum's a mortgage broker, and
there were other
put me
people
in
there
contact.
too. Yeah,
other people from there came, and that's when I met Rose through a contact, and I was like, okay. And when I met Rose, I had like 6 or 7 properties that were with one of the big 4 banks, and the
a
person
townhouse in
townhouse.
Trigger.
Yeah, there's I'm doing reno on that at the moment, actually. But when I was dealing with that bank, the bank said no loans, no loans. I kept going back for a year. I was like, give me another loan, and I was stuck. And I had this money box. There's lots of money boxes up there that have just been gifts from over the years from different banks. There's like a Bloody Bank, a Westpac Chopper, the St George Dragon, just random things, the NAB ballet shoe. It's just like random money boxes. And I had a money box. I had a little bank account with the Dragon account with the St George Bank.
And you got a credit card?
Yeah. And
if in case, can we use a credit card for a
Yeah,
deposit?
I'd use whatever I could, but the bank said that I couldn't get any more loans. That's because the person that was at the bank was an imbecile and couldn't do shit. And if I'd have listened to what the bank had have said, I'd be sitting there at like 6, 7 properties going, oh, Nathan Birch, you've got 6, 7 properties. However, I didn't accept that as an answer. I met Rose, and Rose goes, no, we can go get loans with whatever bank it was after that. And then went to another bank, and the structuring was done by Rose of which bank, because she had the knowledge and the exposure to all the banks. If you think you're going to build a large property portfolio using one bank, you've got rocks in your head. It's not going to happen in 2020 or 2021. You're going to need to use a suite of different banks. So besides that, the understanding of how the finance works. Zinga Finance, we work with sophisticated investors. All our investors are aiming to get large property portfolios. They come to us with one property, they end up with like 10 properties. So, brokers out there don't know how to. In the recruitment process for Rose, she's trying to get 5 new brokers for Zinga Finance before Christmas. If you know a broker, know someone that's starting off,
please.
that's working in a brokerage, tag and get them to send a message, get them to send over a resume. We want to hear from brokers, preferably ones without opinions, because there's a lot of brokers out there, but they don't have the right mindset. They don't know how to build a property portfolio. They don't know how to structure debt correctly. They don't know what to look out for.
Some of the brokers there, they don't write a lot, right? They probably write 1 or 2 loans a month, and some of them, they just do vanilla deal, and they don't deal a lot with the investors. Whereas we with Zinga, we've seen different scenarios, different type of income, and different setup of companies, trust, self-managed super funds. So
they don't have the mental capacity to think, okay, we can buy a property and then 2 weeks later pull out the equity. That's being candid as to what it is. You go to a bank, the bank says, nah, the valuation didn't stack up. It's, oh, okay, I'll just go on with my day. But if the bank says no to us, we're like, well, screw you, bank. We're going to take the client to another bank and get a loan with a different bank. And a lot of work's involved. And when we get paid from the banks, if we have to do that, then the bank takes the payment away. So we're doing double the amount of work for nothing. We're running a charity, but we do it because that's our community grows and how our people grow and how they build wealth in their position. Who will be impacted when responsible lending relaxes in March 2021? How is it going to benefit me as a principal place of resident, as an investor, and as a first-time investor? Very important question.
Responsible lending, right? Responsible lending is always the question, is this the right deal for you? Is it the right loan for you?
I think APRA. The APRA changes.
Right?
Like the things that came in 3 years ago.
Yeah, but these are the responsible lending questions.
Yeah.
Now, if that will relax, I don't think it will ease in terms of, because we, even before this, I've already done responsible lending anyway.
Yeah.
Right? But when it comes to responsible lending, I don't think that would ease, but what we're hoping that comes March is the criteria in terms of the assessment rate.
Yeah.
That's what we're hoping, right?
Yeah, 100%.
The expenses that they allocate, surely you cannot spend 59,000 or 60,000 on your living expenses.
Yeah.
And maybe increase the investment in terms of, they're now 75, maybe you could do to 80%.
So if we look
so
past,
it's not much on the responsible lending. It's always gonna have that responsible lending anyway.
if we were to rewind to 2010, when was the best market, the best lending market?
2005, 2004, the prices went up, right? It went down 2005.
Yeah, 2004, 2005.
And early before 2004, there were like 100%
loans, 100% loans,
100% loans, and
no
no
income.
There's no expenses. You just declared, they only eat vegetables. So living expenses 1,000 a month for 10 people.
Yeah. Back in the early 2000s, it was much different getting loans to what it is today. And what the proposed regulations is that they're going to remove a lot of that. We don't know until we get to see that. But if anything's to go by from what lending market used to be back in the early 2000s, it could be amazing. Like this is, I actually made a call going back in the mentoring program that I did 2 years ago with my investors on the Raw and Uncut mentoring program, that we would see these moves being like all the relaxation of the lending requirements out there, which would mean that money flows quicker, easier, and gets out to those people that need it. Just like the government's made JobKeeper, Job Seeker, Job Maker, Housemaker, Homemaker, whatever sort of stimulus package. They just want to get those packages out there to people. This is something that I saw way beforehand, which they'll
and also probably the assessment rate, hopefully it could go down. Like for example, if you're getting a rate of 2.5%, right? If they put in 2%, that's 4.5. But the bank is, regardless, they'll just have a minimum of set at 5.4 at this stage. So
at the moment it's like 6.5 or something.
Normally the bank would say, okay, if your rate is 3%, you put 2.5%, that will be 5.5. That will be the assessment rate. However, if you're going 2%, you add 2.5, that's 4.5, should be the assessment rate. But no, the benchmark, the minimum amount of assessing the loan is at 5.4, for example. Yeah. So hopefully it will be like the actual rate plus maybe inflated by another 1.5%. That would be a better one.
Yeah. A lot of people out there that are
Yeah.
sitting on the edge that want to go and purchase property, make things happen, restructure their debt, which haven't been able to since September 2016. We'll be having a lot of fun in 2021, and coincidentally, that is the time when we start seeing things change over and roll over with, you know, all of these.
So I'm really excited for March.
Yeah,
It's something that, you know, I wonder what the bank would do.
it is an exciting time to be alive. Last and final one, and this is something that our views may differ. I may have to answer this one a bit.
Yeah.
Hyperinflation. What does it mean to my money in the bank? Should I buy more properties, and why should I buy
You
them?
do that.
This one is a very interesting question, and it's a bit awkward for me to answer because I'm not a financial advisor. I'm just a dude that has a couple hundred properties, a humble guy from Western Sydney with a couple hundred properties that wasn't born with a silver spoon in his mouth but wants to die with a silver spoon in his mouth, hopefully not for a long time. But you know, just my views, my thoughts, my opinions, and no financial advice. If you do want some structured advice, you can reach out to my team, admin at binvested.com.au, booking a call, 1300 367 925. Hyperinflation, you know, basically if you've got $1,000 in the bank, you don't use it, the cost of goods of everything go up. This pen, I don't know what a Sharpie used to be worth back in years ago, but I don't even know what they're worth today. But I know that this would be more expensive than what it was 3 years ago, 5 years ago, 10 years ago, and in 12 months, 24 months, 36 months will be worth a hell of a lot more as well. Everything is rising in value, so your money is buying you less. For me personally, I'm trying to get as much asset as I can, because with that asset value will increase in price. However, at the same time, the cash flow will increase as well and get inflated away. So that's what I'm really excited about, is the inflation to my rents and to my asset prices. My debt still stays the same. So debt becomes irrelevant with inflation. If you bought a property for 200 grand in 2000 and it's worth $1 million, your debt, if you've got a debt of 150 grand, you still got that 150 grand. Unless you refinanced or you paid it all down, you still got the same amount of debt. The debt doesn't rise. It's the properties that inflate in value due to the, you know, printing of money, and that is where I see the biggest potential, because it's not your property that goes up in value, it's the money that is losing its purchasing ability. On that note, I've just got a couple of questions here that I will answer, and a few text messages that have come through. So what have we got here? I haven't even malls debut pandemic busting tech. Some LinkedIn articles here which were sent through from the community. I haven't had a chance to read this. Landlord of Chadstone, the largest indoor mall, will use heat mapping to track what's responded to congested areas and send teams to keep customers moving. So just like any sort of police nanny state, they are putting tech in to, you know, remove your rights. And that came from Andrea. I hope you are doing well as well. Scott sent one through. One of these lines has security, free food, free shelter, and free medical care. The other has no guarantees to quality of life or security. Which one would you rather be? Would you rather be the line on the left-hand side, or would you rather be the two that are free range, right? Our world that we live in, we're as free as a free-range chicken. We're going to end up on a dinner plate for someone, and we're just free-range commies. So it's an interesting one there. Everyone's wanting their own enslavement. Question coming through, Nathan, will the new digital currency still be the dollar or something new? They will call it a dollar, but it's not a dollar. A dollar from 1990 is different to now. It was printed on pieces of paper. They have changed it. There was never any internet banking or anything like that. A digital dollar will be completely different. If they have no access to pulling out cash, you can't take your money out of the system. It is always in the system, meaning it is never yours. So it is not your money. Any new currency, what will borrowing look like? I have got absolutely no idea. Absolutely no idea how borrowing will occur. It may mean that as a broker we become irrelevant. You know, maybe that there's a loan that's attached via some sort of app. It will be very interesting to see. There will be a point in the next 10 years where I want to pay down all my debt, and that is not now. I'm accumulating as much debt, as much asset as I can at this point. I'm in a consolidation phase, still nearly 20 years on my journey, but there will be a point where I want to pay out my debt, and that'll be with inflated assets. I'll throw a few assets back. Maybe I might send back, I don't know, something off my wall there, maybe a little money gun I'll send back and get a lot of money for and pay it off. You talk about enslavement, so how do you not be enslaved, or if you can stop it, how does knowing it make it better? That picture that I showed beforehand of the lion and the tiger, lion I think it was, not tiger, knowing that you're in the system, right? Neo in the Matrix, he understood how the system worked. He still knew he was in the system, but he was able to fly and own that system. The elite, there's an elite state of people that are much, more well off than all of us. They have a different view on how it all works. They understand, and they take the time to understand how money creation, currency creation, and the system works, and they make it work for them. I understand that debt becomes relevant with inflation. I'm just a simple guy from Western Sydney, doing my bit to have as much control over my personal freedom and liberties as possible. And wealth is one thing. Whether you're in, I called the business B.Invested, going back 11 years ago when I started it, and that was because investing into all different parts of the chessboard, whether it be property. Back in the day it was shares, today it's cryptocurrencies, metals, all different things, businesses, people. I think that the other thing you should be invested into is, your own food, right? Can you feed yourself? Do you have the ability to, grow your own food, create your own produce to be able to live off? Are you decentralized? There's a channel that I have called Be Decentralized, and I think it's important that people, have the ability to break free. What happens if they say you can't do something if you don't get a vaccine? Will you be getting a vaccine, or will you not be eating? How much is that important to you for your personal freedom and liberty? If they say if you have to come to us and sell away your data, if they say that you can't come into our store unless you do this, you can't do this unless you do that, you have no control of your life. So understanding that this new currency can be and will be very, very bad. There are other vehicles out there, whether it be precious metals, whether it be cryptocurrencies such as Bitcoin, Ethereum, and Litecoin, and those sorts of things. I'm not telling people to go buy them. I do have exposure to those markets, and I do like them because it gives me personal freedom to be able to trade outside of a centralized system. The centralized system is the centralized media that you're watching, the centralized platforms that you're watching this from. The censorship that's out there is amazing at the moment. They're deplatforming people left, right, and center. The information that you're being programmed with is a scam. The news is just absolute rubbish that's out there. You don't have the ability to control free thinking anymore. We're in a communist society. It's a totalitarian, fascist, Marxist world that we're living in, and having any sort of ability to trade outside of that, having assets, having wealth, gives you more options. I only look at property as being a vehicle to give me more options in life, but there are many other sort of assets that I invest in. I actually do have also that the silver that was won the other week. I've got to give this to Lisa when I see you next, or I can post it to you, but I'd prefer to give it to you. So if you're watching this, let's catch up. We're still going to go and catch up. It's been a long time, but I've got your silver there. But whether it's a little bit of something that you can implement into your lifestyle as a habit, there's different ways that you can protect yourself to be outside of that system and to trade outside of that. A couple of last questions here that I'm going to read through from the community. Vic, hi mate, Bitcoin is too expensive to buy any other cryptocurrency you're investing in. I'm not investing in any cryptocurrency at the moment because I have so much of it. I do mine it, I do have infrastructure, that metal, and like when I say metal I mean like hardware, computer hardware that mines this stuff. So I get my crypto from that nowadays. You don't have to go and buy 17,000 or 19,000, actually $20,000 it passed the other day. Bitcoin hit $20,000 the other day.
Whoa.
You don't have to go spend $20,000 to get a Bitcoin. You can buy $50 of a Bitcoin. You can buy a part of it. It goes down to 8 decimal points to it. So you can invest into $50 worth of Bitcoin. See, wow, on fire tonight, Nate. I try to be. Hey guys, legend, lagging, audio not in sync. I don't know why. Apologies to everyone on Facebook. Thoughts on XRP? XRP is Ripple. I think it's an absolute shit coin. It was one of my first cryptos that I bought. It was at like a cent or a half a cent or something like that many years ago. I sold it, made a couple of bucks on some of it, made a bit of a loss on some of it. The day I realized what it was, I was like, I don't want to partake in this. It's not decentralized. Michael said, check out this bloke, he's got good information. I appreciate the tags of your friends, the sharing of this information, and the reach of the community, because we're only as strong as the people that are out there. We're getting censored quite a lot nowadays. There's not as many viewers. I know there's a lot of people that are watching and people that are sharing it, but it doesn't pop up in your news feeds like we used to. So if you could tag your friends and family and whatnot, that'd be great, and share it on your channels. That'd be awesome. The new bottle recycling program in WA wants you to sign up to their ID card system so they can deposit directly into your bank account. They are trying, this is a time where they're going to try and take your data and use it for giving you money. If you, like going back 3 years ago, all the rules for finance, for accounting, for legal, everything went digital, and they are taking your rights and freedom away from you. Don't forget CBA putting a moratorium until the 9th of 21 for borrowers who can't pay. I didn't realise that they extended that for another 6 months, which is crazy. You're on fire, favourite day of the week. Thanks, Andrea. Hope you're doing well. Voting for Birchfeed podcast. Who's keen? I'm cool to do chats with people. Organising this stuff's a bit tough. I have been chatting to some people to be on their podcasts. One of them is Pete Evans, actually, so I might be doing it with Pete Evans.
Why are you going to have a kitchen?
No, Pete Evans, he's decentralised. He's anti-system. They threw him off the TV because he spoke his meat. He's fine.
Yeah, the chef, right?
Yeah. He's the chef, but he does so much more about decentralisation, which is pretty cool. And he's got a really cool following as well. I'm not saying I agree and align with everything Pete says, but it's good to have critical, free-thinking people out there. It's amazing. David, 7 p.m. tonight, ABC, always be communist. Discuss the $100 billion buying bonds, mate. Your mates, your audio is out of sync. It's like a bad dubbed ABC or SBS. It's a late video, apologies. Ashley, love here, Nathan, on a rampage tonight. Can't wait for updated paddle pop inflated prices. What's going on? Thoughts on the government buying assets in case the Aussie government starts controlling what you do, example, rent controls, forced property sales. I'm not buying overseas assets, but I do, as I said, I have exposure in cryptocurrencies, metals, and all different sorts of decentralized assets. What's your thoughts on price increases on property in the coming 2 years, 20%, 50% increase? I can't comment on that, but I know that when people have money and have access to cheap, free money, they will go and buy and get themselves in the debt. It's just the human nature of the human. Looking at the way that they've dropped the interest rates used to be 5% going back 2 years ago. Now they're 2.5%, 3%, 2%, whatever they're at. The cost of owning property is halved basically in the last 2 to 3 years. The access to capital has become easier, will be becoming easier. I could see 100% gain in the not too distant future. That's not saying any sort of that we're going to see a boom and it's going to double, but I do believe that we will see there. Nathan, hello, I am watch your live. Thanks for that. Thanks for tuning in. Michael, hope you're doing well, bro. Michelle from Queensland said hi to you, Rose.
Hi, Michelle.
She's here watching. What about self-funded retiree from property with passive income? Will the bank still lend if you have excess over your expenses? A lot of people still are buying properties in their self-managed super fund. If you need help getting a loan inside your self-managed super fund, Rose and the team here at Zinger Finance can help you. A lot of people that have self-funded retirees aren't getting the yields. A lot of people that aren't getting yields nowadays. you can't get a yield on your money you put in the bank, you get nothing for it. They're going to start charging you for having your money in the bank. You put your money in the share market, there's no dividends being paid. There is nowhere that's actually paying a yield. I believe that our new digital currency will pay a yield. It will be an interest-bearing account which will provide currency, which is bad within itself, and another flawed model. But a lot of people are taking their money and putting it into property, and that's where I think we're seeing a lot of the pent-up demand coming from. Jeremy, I hope you're doing well. Not Jeremy from the office, but Jeremy that's in the community. Still happy to chat about adjusting some land. Lyndall, I hope you're doing well. Long time no speak. Hope life's well. Someone with zero finance knowledge here. Are you able to use equity from your current property to use for a first investment property if Zinger chooses a different bank that current mortgage? Would this mean moving the entire loan to one bank, or is it better to use different banks? I'm assuming that we could use sort of, a couple of banks. I think you guys may have been in contact. Maybe good for a conversation offline into specifics, but you could pull the equity. So someone beforehand asked if they had 150 grand, could they use that for another property purchase? You could use that as a deposit for maybe 1, 2 or 3 properties. Whether you use the existing bank to purchase those properties with 3 new loans, or whether you take that deposit out or the equity from the current property and go to a different bank and buy the 3 properties there. It's up to you and what the banks would service, but that's where the team will be able to help you with. How long does purchasing alcohol affect the bank's perception on my credit rating? I don't think that they're going to affect you on buying alcohol. They're not biased against buying alcohol, but people will go to the pub, tradies, they might get paid on a Thursday and go down to the Bricky's laptop, the poker machine. It looks like you're pulling out that cash at a pub, that you are a gambler. That's what it looks bad by. But if you go and buy wine and shit like that, people always go and do that. So don't stress if you're doing that. But it's more so where and how you're pulling that cash out, because it does leave a footprint, and the banks are negative on that sort of stuff. What do you think of buying under trust? Harpreet, that is more of a question that I would put towards an accountant. However, from a finance perspective, Rose, does it affect you if you're buying under a trust or pro or con?
It does. The only thing with trust, right, you cannot do negative gearing, right?
Yeah. So if you are negative gear, if you've got a negative property, or if you've got some tax deduction that's stuck in the trust, if you're buying under a trust and you have land tax free threshold under your personal name, you'd be paying land tax under the trust from day one, where under your personal name you may be saving on that. There are pros and cons. A lot of accounts will try and sell the Kool-Aid of the trust, which isn't in most people's best interest. So just but look at it, see if it's good or not for your own personal situation. Lyndall, oh shit, I'm already screwed too many kids, selling the kids tomorrow from Matt. Look, it's something that we can work around that with different lenders, and we're going to do what we can do. And I'm not telling people not to have kids or procreate. We should be doing that. But yeah, Andrea, if a property is cross-collateralized, how does it affect my ability to refinance? Bank did it without our knowledge. Would like to refinance both. Andrea, if you want to go to the Zinger website, zingerfinance.com.au, book a meeting with the team. Have a look at what options you've got there to uncross those properties. Banks do that, and it's very typical for them to do that, and it's not in your best interest to do so. Use term deposit security and home loan payment. No cost to use a broker. It would be crazy not to use one. Thanks, Steve. Vic, can I buy property? I have 300 grand in equity, but not great financials for self-employed. Vic, once again, go to the Zinger Finance website, have a chat with Rose and the team. For those of you that haven't been watching this for the whole broadcast tonight, Rose has been my personal broker for the last 15 years. 80% of my loans have been with Rose and building that out for me. Cool. so many questions, can't get through them all. I want to leave it there. I want to thank everyone for tuning in this evening
Thank you.
and watching. Any final notes, Rose?
Well, the final notes is please keep in touch with us. We will be able to help you. I have the faith that we can.
Yeah, cool.
So
if anyone's going to be able to build your property portfolio, get you the finance, it's going to be Rose and the team. No one out there understands finance. No one has had the exposure of building thousands of property portfolios like we have, and with the sophisticated lending sort of requirements that have been, dietary requirements for everybody's personal situation. So
yeah.
You can reach us, give us a buzz, go to the website, zingafinance.com.au, book an appointment with the team now or tomorrow or whenever. But as I said beforehand, I want to touch back on one final point, and that is there is 59 days left before the new year. How did you go for 2020? Did you achieve the goals that you set in 2019? Why haven't you done that? What things have you improved on? What things could you improve on? What are your goals going to be for 2021? How are you going to achieve them? Have you got your finance ready for moving forward? Have you touched the equity in your property in 2020? And when was the last time that you reviewed your finance position to see what you can do with your portfolio? A year's gone by. Have you done anything? Have you just sat there and been like, oh, Corona's too bad? And I'm sure that you guys here that are watching, you wouldn't watch an hour or two of me talking about some of the things that I talk about if you didn't realise that this thing is a load of shit. So I don't think that would have sort of held you back. But there is a lot of people out there that are, in the world which are, affected or frozen or impacted by it. And when was the last time? Just simple question. When was the last time you reviewed your finances? Was it this year? If it hasn't been this year, years past, look at your position. You might have equity. There's so many people that are pulling equity a day after settling a property, a week after settling. I don't like to say a day because people will come in as soon as it settles and say, hey, Rose, hey, team, can you refinance my property? But yeah, with it, people are refinancing a day, a week, a month, 2 months after settlement. If it's been more than that since you've looked at your finance position, you should reassess it and see what you can do to improve your financial position. Things have never been better than where they are today in 2020. You've seen videos of me over the years, guys. There's been times where I haven't had the greatest energy and shit like that, but you've never seen me as pumped and as exciting by the opportunities that have presented themselves in 2020. So look forward to, if we are helping you, look forward to continuing to help you with your journey. If we haven't had a chance to review your position, look forward to being a part of your journey and helping you kick ass with your position.
Thank you.
We'll catch up soon, guys. Have a good evening. Bye for now. See you
Good
next
night.
week. And if you haven't already, make sure that you email my team. I'll be doing a hyperinflation video. It's a webinar. It's an invite only. It's not on social media. Email my team at admin@binvested.com.au and they will send you to the link to get on there tomorrow night. It's at 7 o'clock, hyperinflation. See you there.